Good morning, everyone. Today is March 16th. It is a chilly morning here in March. We would like to thank our sponsors for, the YPG meeting this morning of Central State Healthcare Systems. This morning, we have a wonderful conversation about taxes and hopefully some tips and tricks for our taxes for this wonderful 2021 season from Kerri. Kerri, if you want to kick things off, I would appreciate it.
Right. Well, good morning, everyone. Happy tax season. It's a great day to be an accountant. So our tax filing deadline of April 15th for your individual tax returns is less than 1 month away officially. So even if you file an extension on your personal tax return, your money is still due to the IRS on April 15th. And the deadline for S Corps and partnerships, so if you have a business that's an S Corp or a partnership, those were actually due yesterday. So if you did not file your tax return for your business and you need an extension, you should get on that ASAP. And if you need help, you can always let me know if you have your own business. So I wanted to just talk about some of the changes that have happened in the last year due to COVID. A lot of bills have been passed. A lot of things have been going around, stimuluses, unemployment, all the good stuff like that. So first, I want to talk about the first two stimuluses. So stimulus 1 and 2 were actually just prepayments of a 2020 tax credit that they were paying out in advance. And that's why we started getting them last April and this past January. They were just advance payments of a credit that you can claim on your 2020 tax return, which means if you did not get that payment last April, or if you did not get it in January, or it was not up to par with what your 2020 income was, they did base it off of your last filed tax return. So if you had high income in 2019 and it went down in 2020, you can be eligible to make up the rest of the money that you should have been entitled to based on your 2020 income. So when you file your tax return, you can claim that credit for the remainder of money you're eligible for. And these two stimuluses, you would get $1,400 per person if your income is below $75,000 if you were filing as a single person, and if your income was under $150,000 on a married filing joint return. And these are phased out up to $99,000 of income for a single filer and $198,000 for married filing joint. So that just means if your income as a single person is between $75,000 and $99,000, you're not going to get the full amount, you're going to get a partial payment. So that's where things can get dicey, and you might have gotten a partial payment last year, but you should have been entitled to the full one. So that'll all work itself out on your 2020 tax return if that is your situation. And then last week, the American Rescue Plan Act was passed, signed in by Joe Biden last Thursday. It feels like an eternity ago. It was only a few days ago, though. So that we're getting another stimulus payment. So this is going to bring up the one from January when they were talking about getting $2,000 checks, $2,000 checks. We only got $600. They're giving us the $1,400. That brings the total up to $2,000. So this one is a little different. The limit to get the full amount on your income is still the same, $75,000 for a single person and $150,000 for married filing joint. However, this begins to phase out at up to $80,000 for single people and $160,000 for married filing jointly. So the income limit to receive money is a lot lower. You'll only get a partial payment if you're within the range for a single person of $75,000 to $80,000. So that means less people will be getting a payment with this stimulus. But if you are eligible to get any money, full amount or partial payment, the IRS has already started sending out this money. And there is a website that you can go on and check when you'll be getting your stimulus payment and how. I was able to log into the website yesterday. It told me that my stimulus is scheduled to be direct deposited into my bank account and gave me the last 4 digits. And it said tomorrow, 3/17. So I know that's coming, and I know to check my bank account for it tomorrow. I know not to look every day, every 10 minutes to see when it's coming. And with this, they are also saying that adult dependents, so for example, a college age kid who is still claimed by their parents, they were left out of the first 2 stimuluses. In this situation, a taxpayer can get the $1,400 for an adult dependent. So If parents have a kid in college, they will get $1,400 for their college-age child. The college-age kid is not getting the money. Whoever is claiming them, which is most likely their parents, will be getting the money. And there's also an increased child tax credit with this. So usually you get a $2,000 deduction per child on your tax return. This year for 2020, it's going to increase. You'll get $3,600 if your child is between 0 and 6 years old, and $3,000 for children between 6 and 17. They are talking about having this be paid out in advance, maybe in installments, but there's no set, they don't have a set plan for it yet, but it's something to look out for in the future if you have kids. The next big thing that passed with this bill is unemployment. So for 2020, the first $10,200 of unemployment income is excluded from your taxable income. So you don't pay tax on it. But the limit is your total income has to be under $150,000, and that's when you count your unemployment in it. So if your income is $150,001, your full unemployment will be taxed. There's no gradual phase out. It's a hard stop at $150,000. If you already filed your tax return and you did not exclude your unemployment income from taxable income because the bill hadn't been passed yet, the IRS is urging you to not file an amended return at this time. They will be issuing guidance. I don't know when. I don't know what that guidance will be. All they said is hold off on filing your amended tax return for now. All right. Another thing that has passed this past year has to do with charitable contributions. Usually, you can deduct your charitable contributions on your tax return only if you take an itemized deduction. So when you file your taxes, you get either a standard deduction, which is a set amount, or you can take an itemized deduction, you get whatever's higher. The itemized deduction includes medical expenses over a certain percentage of your income, your property taxes, your mortgage interest, your charitable contributions. But this year, if you take the standard deduction, you can still deduct up to $300 worth of cash contributions on your tax return. So this means if you walk into a soup kitchen and give them $300 worth of bread, you cannot take anything on your tax return. But if you walk into the same soup kitchen and give them $300 worth of cash, you can deduct that on your tax return. So it's only cash donations. Next year in 2021, it will increase to $600 for married couples, but it will stay at $300 for single filers. And one last thing that I wanted to talk about is why you should go see an accountant instead of using TurboTax. So TurboTax is a lot cheaper, it's quicker, it's faster, it's easier, you're in control, you're not waiting on somebody else. But while those softwares are easy and simple and they seem pretty great, they don't know how to think critically in certain situations. And they don't remember your situation year after year. They don't know you on a personal level. They're not asking how your kids, your sister, your brother, your parents, they're not asking about how they are. They're not asking about your situation, if you plan on having any changes in the next year that you have to take into account. So as an accounting firm, we can help you plan for that. If you just started a business, we can say you might need to start paying estimated taxes, and TurboTax wouldn't know when you file that you started a business a month ago and are expecting a lot of income. So we can help you in situations like that. So a situation I actually encountered yesterday was I was on the phone with a client and I was basically finished with her tax return. I just had a simple question. And then at the end I said, you know what, do you have any medical expenses? Because you're itemizing on your return, we can take some medical expenses. And she said, well, you know, I'm a cancer survivor, so I have a ton of medical expenses, but I know it's only over a certain percentage of your income. And I think we make too much money. And I said, well, you might make too much money on your federal return, but did you know that New Jersey's threshold is only 2% of your income, whereas the federal's 7.5%. And we talked, I crunched the numbers and I said, well, you need this much to make a difference on New Jersey, this much to make a difference on federal. So she said, I'm going to call my insurance company. They can give me my out of pocket. I'll get back to you. She called me back in 20 minutes. It was just a super quick phone call. She gave me her medical expenses. Turns out she actually got a deduction on New Jersey and her federal tax return. So that's something she didn't even think she qualified for. If I didn't press her to go get the numbers, she would have never gone and done it on her own. And it actually made a big difference on her tax return, both federal and New Jersey. Another thing is, last year I had a client come in, she had been always done her taxes on TurboTax. She walked into our office in 2019 holding up a letter that said the IRS wanted $14,000 from her 2017 tax return. So you can imagine how stressed out this woman was. So I took her 2017 tax return. I asked her to send me all of her documentation. It turns out her son had a medical condition and she had to pay a lawyer $30,000 to get proper medical care at his school while he was in school. So I sat down, I printed out and combed through IRS rulings on medical deductions. There were some other things with her husband's home office expenses. We looked through everything. I sent the IRS a 100-page packet detailing exactly what she should be allowed to deduct that they were saying she wasn't allowed. They ended up knocking $10,000 off of her bill because she came to an accountant and didn't try to just pay it off right away or try to do it on her own. We were able to use our expertise, our resources, and help her get $10,000 off of that bill. So those are just some situations where visiting an accountant can really help you, and sometimes it can be worth the money. So does anyone have any questions about, I talk really fast, I apologize. But anyone have questions about taxes?
You did a great job. You didn't talk fast. You went through the information as if like you may or may not know it, which is really important because not everyone understands, the itty bitty gritty details of all of this. So you did a very good job. Now, does anyone have any questions? Because I'm sure some of us do. Don't be shy. You can ask a question. She's the expert in the room.
Not a question, but more to just kind of echo what Kerri was saying, that, yes, you can pay TurboTax to do it, but and there are a lot of CPAs who are just tax preparers, but I think Kerri's clearly shown that it's more than just preparing and filing your taxes once a year. There's tax planning strategies that you can be taking into account throughout the entire year, where maybe you're making an additional contribution to a charity because it will have the benefit. Maybe you start contributing to an IRA because there's the tax benefit there. So there's these little planning strategies, whether it's personal or from a small business perspective, that TurboTax isn't going to be able to help you out with, and a good reputable CPA is absolutely going to be able to help with.
If you have any additional questions, I mean, obviously I'm still open to questions now, but I'm going to put my information in the chat box. So we're Bernicker, Eiger, and Lang. We're located in Eatontown in Lakewood. So we handle individuals and small and medium-sized businesses. We do tax returns, tax planning, bookkeeping, anything you might need, we're here to help. So you can always just contact me offline if you don't want to speak right now, but we're here to help.
Patrick, did you have a question? I saw you pop up on
Yeah, it was a general question, Kerri, for the the most recent stimulus. What about individuals that made more than the cutoff last year, but so 19,
Okay.
2020, they're under the bar. Are they going to get that later in the year, or is that something they're going to catch on their next tax return in the 2020 season?
Right now, I'm not sure. I think it might have to be something that's caught up on your 2021 tax return. I haven't really heard anything about that. It was released last Thursday. We're still working out all the kinks and trying to figure all that out. But my best guess would probably be it's a tax credit for 2021.
Okay, I'm gonna stop the recording.